This chart demonstrates why it is unnecessary to combine fibs of near equal size. This causes a mess of overlapping fib levels. The better route is to have the larger fib be a minimum of 2 fib levels larger than the small fib to avoid a cluttered chart and redundant price identification. This chart is clearer and identifies the most relevant fib levels more neatly with higher validity. Having the large fib 2 fib levels larger is just a minimum. Generally, the best size difference is a large fib 3 fib levels larger than the small fib. Usually the 0.5 level of the large fib lines up with the 0 or 1 level of the small fib, depending on whether the small fib is an up or down trend. This more clearly highlights the areas of greater significance. Normally, this means for every large fib level, there are 2 small fib levels in between the areas where the fibs overlap. The levels at the high and low of the small fib are usually easily identified as significant ranges. Naturally, this is the case because these are moderate to major reversal areas that formed the high and low of the small fib. These are also 2 levels that line up with the large fib. The low or high of the small fib normally line up with the 0.5 level of the large fib, when the large fib is 3 levels larger. The rest of the fib levels in between are not as easy to identify. As seen in this and other examples, the small fib levels that are close to the 0.236 and 0.382 levels of the large fib don't always form more significant zones. Remember to also check if they line up with past reversal ranges. In this case, the 0.5 and 0.618 small fib levels are about equal distance from the large 0.236 fib level. We must only choose one small fib level to form a zone with the large 0.236 level. Here the small 0.618 fib level was chosen because it lined up with more past reversal areas that were more numerous and significant in terms of the length of the reversals. Going back to a previous chart example that only used one large fib, we can see the added benefit of combining fibs, in this case combining a small fib. At the same time, we can see the characteristics of referencing past reversal points to better identify the most relevant price zones. Note the increased importance of price ranges formed by the small and large fibs that line up with reversal areas. Also observable are some reversals just below the 2571 to 2520 range, because some past swing points had higher volume and larger price movements, which lowered the resistance force. The next 2 charts demonstrate the drop-off in effectiveness that normally occurs when the large fib is 4 levels larger than the small fib. Key areas of greater significance are still revealed at areas where fib levels from both large and small fibs are close and line up with past reversal areas. However, certain areas are missed in the middle levels between the high and the low of the small fib that were identified using a large fib only 3 levels larger. For this reason, if it is possible, it is normally best to have the large fib 3 levels larger when combining fibs. Anything more or less leads to misidentification of price zones that are more important. Unlike this previous version of the chart example, this version of the large fib does not cover the 25,300 to 25,100 range, where significant levels were identified using a fib only 3 levels larger.